Hello and welcome to today's HR Daily Advisor webcast. Thank you all for joining us for today's program, Student Loan Assistance Creates Advantages, sponsored by Edcor. My name is Laura and I'll be your HR Daily Advisor host for today's event. Before we get started, we need to go over a few housekeeping items so that we can get you familiar with the platform. The console you're looking at right now offers multiple application widgets that you can use. You can resize any of these widgets or move them around and minimize them as you wish. There is a media player button where you can play with the volume of the presentation. Please take note that there is no dial-in for today's event. The audio will be just streaming directly from your computer speakers. A copy of today's slide deck is located in the Resource List widget. That's the green widget at the bottom of your screen. If you're experiencing any technical difficulties, please click on the Help widget. It has a question mark icon and covers most technical errors. If your technical issue does not resolve, please enter a question in the Q&A widget, and our team will gladly assist you. All right, now please join me in welcoming today's guest speakers, Adrienne Way, CEO of Edcor, and Sarah Van Wageneer, Vice President of Corporate Growth at Edcor. Welcome.
All right, well, thank you. We're going to go ahead and get started, and I am going to just, as a quick run-through, talk about what we have on the agenda. I'm going to read through them really quick, and then we'll get started. So we're hoping today, when we're done, you have some understanding on how student loan debt is a hindrance for your employees, some of the problems and issues that high levels of student loan debt create for employers, practical solutions that employers can implement to reduce their employees' student loan debt, some information to bolster your case for adding student loan assistance to your benefit portfolio, and finally, benefits to employers and employees of easing the burden of student loan debt. So first thing we want to do is ask you a quick question. So if you could, please, take a second to answer which education benefits do you currently offer and mark all that apply. Okay, so looking at the results, and as people are finishing up here, this is pretty typical. This is kind of what we expect. Tuition assistance, although I'm happy to see it's at 100%. Certification is definitely at the 60% mark, and we see that industry-wide. Scholarships, external and internal training, of course, high numbers as well. And what we see at the bottom is that what we're expecting is student loan assistance right now is at pretty much 0%. Not a surprise, and that's why we're here today. So we want to talk a little bit more about that benefit. So let's get started by having just a quick overview of the history of education benefits. I think it's important to look at the whole view of education and what employers are offering to sort of understand where we have been and where we're moving to. So first of all, employers have been offering tuition assistance for decades. This is not something that's going to go away. During the recession, employers, thankfully, the most recent recession, employers did not cancel or eliminate their programs, but they didn't promote them or advertise them. There was just they were kept sort of quiet so as not to gain a lot of attention. Coming out of the recession, employers began to promote their tuition and education assistance programs and their training initiatives as well. And then as the market continued to become stronger, employers began to extend their education benefit programs to include coverage of certifications and certificates, even CEUs in some cases. So as we saw in the last question, the number of certifications and certificates offered, it was at 60%, and that's pretty much what we're seeing as well with certifications falling under a tuition program. Program benefit limits were also increased and promoted. So these programs were now being used, moving forward in a more strategic manner for recruiting and retention, as well as development. So that leaves us with today and moving forward into the future. In the current market, employers are competing for good employees. For additional recruiting and retention solutions, education assistance programs are being expanded to offer many of the items from the last poll, including what we want to focus on today, student loan assistance. All right, so one more question. For many of us, it has become open enrollment season. So whether you're planning for 2020 or your planning's all done and you're getting ready to start the actual enrollment, let's see where you stand. So if you could please answer the question. Give you another minute or so. All right. So, oops, getting crazy here. There we go. So what we see here is pretty typical. 13% in the next 12 months hope to add. In the next 2 years, another 6.5% or so. 40%, fingers crossed, I really want to add this program. Yep, that's where we expect to see the majority. And then another 40% or so saying that you don't plan to add. So this is exactly what, honestly, we've been seeing across the board. It is, in general, expected that by 2025, 35% of employers will have this benefit, up from right now, which is approximately 8% of employers currently offer student loan assistance.
So we're going to jump in and talk about how big the student debt problem is and how it continues to grow. So the stat you see there on your screen is that 70% of new graduates owe approximately $37,000. This is a large amount of student debt for them to carry. The most recent Federal Reserve data shows that 44 million people currently owe $1.5 trillion compared to $830 billion in 2010. Student loan debt is now actually the second highest consumer debt category, behind only mortgage debt. And it's actually higher than both credit cards and auto loans combined. So, and there's 65% of the debt belongs to people under the age of 40, which are people who are in their prime working years. So, and looking into the future, the Congressional Budget Office estimates that $1.27 trillion in new federal student loans will be added between 2018 and 2028. That's a staggering amount of debt that will exist by 2028. So if we continue to look at the growing student debt problem, and we'll review a few of the statistics reported by the American Student Assistance Survey and how student debt is affecting the lives of many workers, and more important for you, how it's affecting your employees. So we're just going to look at a few of these. 44% have no idea how they're going to pay back their student loans. And 40% say worry about their student loans has impacted their health. This can be both mental and physical well-being. And almost 60% say that paying off student loans is a higher priority than putting money into a 401k. And 92% say they're likely to take advantage of a sign-on bonus to specifically help with their student loans. So if you're interested in building a student loan assistance program and adding this to your benefit offerings, all of these stats can help build your business case. And these stats are costing your organization money, time, and productivity. So we're going to dig in a little deeper and take a look at those who have finished their degree and those who have not. The student debt does create immediate personal problems for graduates. It creates some regret. So according to a May 2019 pay scale survey of college graduates, 2/3 of those graduates with a bachelor's degree regret something about their education. And over 27% of the graduates regret having student loans. This is the top rank regret. And graduates who have borrowed amounts that funded up to 75% of their education tend to see their education as significantly or somewhat overpriced. So if we look again as a reminder, there's $1.5 trillion of student loan debt that exists, and graduates owe over $37,000. And 65% of those graduates, which is your workforce, say that they may find a second job to help pay off their student loans. So student loan debt doesn't create just an immediate personal problem for graduates, it also creates long-range personal and financial problems. By age 30, graduates with student loan debt had only saved 50% towards retirement than graduates with no student loan debt. And we saw earlier in the presentation that 59% with student debt in the workforce say that paying off student loans is a higher priority than putting money in their 401k. And graduates are postponing large life decisions like marriage, home buying, and other large dollar purchases while they're saddled with all of this student loan debt. And graduates under the age of 35 are spending dramatically less in all of these areas. So student debt is something that touches almost everyone in some way. Even if you aren't burdened by student loan debt, you participate in an economy that is affected by rising debt levels. Even if you don't owe money, your tax dollars contribute to the federal student aid programs. Even if you aren't struggling to finish your education due to student debt, you are part of an economy that requires educated and skilled workers in order to be able to compete globally.
Okay, so this next slide topic, student debt, problems for non-completers, is something I feel pretty passionate about. Everyone is talking about the individuals who have completed their degree and the debt they have, and it's significant, no doubt. But another significant population that is being somewhat ignored are those who have the hardest road to financial solvency, and those are the people who have not yet completed their degree but still have student debt. So here are some of the immediate personal and financial problems these individuals face. More than half of students who enter a post-secondary institution leave without any sort of degree or credential. Therefore, when you're designing your student loan policy, these people should be considered. It will make your company and your program stand out. The loan default rate is 3 times as high for non-completers as for those who graduate. And the typical defaulter owes less than $10,000. This is significantly less than those who graduate, but of course, their earnings are going to stay lower because they haven't graduated in many cases. Employees in their prime earning years, again, those under 40, can't increase their wages because they lack the education to move ahead in their career. And those same employees in their prime earning years can't return to complete their educations to learn new skills because they can't afford the additional education expenses. So therefore, these individuals are just caught in a seemingly impossible to get out of loop. So some of the long-range personal and financial problems for these individuals. This list is not all-encompassing by any stretch, but it's something that as employers we need to think about because it's affecting our employees, as Adrienne said earlier, not just their immediate day-to-day, but their long-term health. People in default on their student loans can lose financial resources through garnishment of their tax refunds, part of their paycheck, or even their Social Security when they're at retirement age. Their overall wealth throughout their lives can be greatly diminished. And the third bullet, this is a big one. The educational attainment of the non-completers' children and dependents can also be affected. Studies show that people who do not finish a degree or don't go to school at all will often have dependents who also don't go to school and finish a degree. And this causes a chain reaction for generations to come in a lot of cases where school is just not something that's attainable. So additionally, on top of all the other good reasons to include non-completers in your policy design as you're looking at student loan assistance, these students are often minority populations, including women, that businesses need to cultivate and encourage to reap the advantages of a diverse workforce. So, problems for employers. Money, of course, is one of the main reasons for students dropping out of school and not completing their education. And money is one of the main reasons that they can't go back to complete their education. Employers need employees to continue their education so they can have a highly skilled and educated workforce that makes their company productive and profitable. The demand for an educated workforce is growing. By 2020, that's next year, by the way, 65% of job vacancies will require some post-secondary education and training. 6 million jobs will require a graduate degree. 13 million jobs will require a bachelor's degree. 7 million jobs will require an associate's degree. And 5 million jobs will require a post-secondary certificate. These numbers are staggering, and we are out of time. As an employer, we have to figure out how we're going to fill these positions. So, based on the stats from the previous slide, it's pretty obvious that employers are going to struggle to be competitive and gain the human capital needed to be an employer of choice. It's become so important to emphasize education and skill attainment. So here's a quick breakdown of some employer concerns. Employees are unable to complete or further their education because of student debt. We've talked about this the whole time. And therefore, employers are having problems finding qualified employees. Job openings are at a record high level, but jobs are going unfilled due to underqualified and underskilled applicants. Employers are finding the need to replace a huge population in their workforce, the retiring baby boomers. And one of the creative ways that employers are looking at trying to fill those massive amounts of openings is providing tuition assistance and student loan assistance, education benefits in general, focusing on diverse populations in order to help promote an inclusive workforce, resulting in minorities and women filling those open positions, including the high salary leadership roles.
So we've reviewed a lot of information about student loan debt for graduates and non-completers. And there is a solution that employers can offer that's a comprehensive education benefit package, but we're going to continue to focus on just one part of that solution, which is the student loan assistance. We've looked at a lot of stats and a lot of data so far, so what does all that mean? Quite simply, it means that student loan assistance is an integral reason to hire on or stay with an organization. Without this benefit, companies are going to continue to see a higher turnover in key areas and have difficulty hiring new people. We just went through the staggering amount of requirements for degrees coming up here in the extremely near future. So for a student loan assistance program, there are benefits for both employees and employers. So we're first going to take a look at the benefits a student loan assistance program has for employees. There's an opportunity for employees to seek continual education and skill development, and this results in employees feeling valued and having a sense of loyalty to their organization. And 75% of all workers have used student loans to pay for their education, so the impact of a student loan assistance program is really immediate for those employees. Employees will have improved health, including physical, mental, financial. I can't stress the improved health enough. This benefit can result in less illness, less stress, less absenteeism. In addition, they'll be able to take more control of the financial well-being, and this is vital for employees. And remember, we saw earlier that 40% say worry about their student loans has impacted their health, and 56% say they worry about their student loans all the time or often. There'll be skill upgrades to improve knowledge and meet technology demands. Employees are going to have the ability to save for 401k, buy homes and other goals more quickly. So remember, we talked about that a little bit earlier as well, that almost 60% of graduates say that paying off those student loans was a higher priority than planning for retirement and putting money into their 401k. And employees are going to have the flexibility for how their money is spent on all the benefits that their organization offers. Okay, so we just talked about the benefits of student loan assistance for employees. Now let's talk about what the benefit is for employers. Providing student loan assistance along with tuition assistance really does build a strong base for businesses that understand the benefits of building a diverse workforce and an inclusive workforce, which we've talked about a little bit already today. Giving employees access to education through tuition assistance and loan assistance opens the doors for all employees to have education and skills that are going to make a company more productive and creative. So employers are going to be able to recruit employees that have completed their education and have the best skills. So we saw a little bit earlier the education requirements that are expected in 2020. So again, next year, 31 million jobs are going to require some level of degree or post-secondary certificate. Student loan assistance is a relatively new benefit, and it does make a company and its employment opportunities stand out from the rest, and it creates a strong employer of choice. We all know employers are competing for talent in the market, and it is difficult to find that talent to fill all the positions. So this plan can attract high-caliber employees who can help promote a company brand. So, and we look at employers will be able to retain employees that are interested in lifelong learning and continual career and skill development. So to go a little further, by 2025, millennials are going to make up 75% of the workforce, and 70% of them are going to have student debt. So student loan repayment assistance will meet the need of this large segment coming into our workforce. Employers know that they're all competing in a tight labor market, and to add some insight to this, by 2020, there will be 38 to 40 million fewer workers globally with the skills and higher education that employers need. And the Bureau of Labor and Statistics predicts that the aging baby boomer population is also going to contribute to the decline in the labor force participation through 2026. So to continue on, employers will be able to develop a workforce that is inclusive and diverse by offering loan repayment to employees of all socioeconomic, racial, and ethnic groups. This greater diversity and inclusion can mean a stronger economy overall, and specifically for minority population groups. Many affected by the debt are women and minorities, and helping these populations will improve overall diversity initiatives. So employers are going to be able to hire top job candidates and realize the benefits of increased productivity, sales, profitability, and decreased turnover and absenteeism, which we also talked about a little bit earlier with that whole wellness and not worrying about the student loan debt. So employers can attract long-term employees. 86% of employees would commit to a company for 5 years if the employer helps pay back their student loans. We also talked that graduates will also look at signing on with a company if there is a sign-on bonus that will help them pay back part of their student loan. So in here, employers can really differentiate themselves and improve their company brand with student loan assistance. As again mentioned earlier, currently only 8% offer student loan assistance today, so this is a very, very forward-thinking benefit for employers.
Okay, so let's talk about a case study. This particular case study is in regard to a healthcare employer, and their problem, quite frankly, is struggling to recruit and retain essential nursing talent. And we're hearing this across the board from our healthcare clients that is becoming a difficult problem by multiplied by about 100. So if it was bad 5 years ago, it's a lot worse now. Turnover at this particular employer was high. Nurses were leaving for minimal pay increases. So just for, 50 cents more an hour or just a few $1,000s more a year, they're leaving companies that they've been with for a long time just to get those extra, few dollars. This is huge. That means they're willing to walk away from things like more vacation time that maybe they've earned, and other perks being with the company for a longer period. So this is causing a lot of recruiting and retention problems. So what did we do? From a solution standpoint, we implemented a specific pilot program for those nurses that had graduated in the last 6 years. In addition, the benefit, or the student loan assistance benefit, was activated immediately. So there was no waiting period to join. Basically, if you're hired in or you were already a nurse, you get to take part right away and start putting money towards your student loan. The benefit is paid monthly, so every month through Edcor's student loan assistance program, a payment is made directly to the employee's loan provider. There is a capped maximum number of years on payments. So rather than just, for this plan design, rather than letting the loans be paid back indefinitely, there is a finite number of years, or could be dollars, that the employer is willing to help pay back those student loans. That way they can budget, they know what to expect. In addition, this program included a 2-year retention payback requirement. So in other words, for the individual to participate in the benefit, they are required to sign an agreement that states that they will pay back any funds paid on their behalf if they leave within less than 2 years after payments begin. So what are the results? Well, it's still early. This benefit hasn't been around too long, a couple of years. So we're still monitoring the results, but here's what we have so far. The time to fill for recruitment stats has improved by 14% to date. So I don't know about you, but knocking, a number of days off that time to fill is huge. Though relatively new, turnover is trending 8% lower for those individuals eligible for the benefit versus those who are not. There is improved engagement and satisfaction. This has been recognized informally. I don't have formal stats, but I can tell you that there has been discussions and definite positive feedback in those areas. Participants, on average, will see a reduced student debt balance of approximately $9,000 over the course of the total payment amount. And employees are on track to pay off their loans on average approximately 3 years faster than without the employer contribution. So obviously very positive. It's all trending in the right direction. We expect to continue to see this go in the right direction, and quite honestly, expect to see, any of our clients utilizing student loan assistance with similar results. There's no indication that they would be any different. So, one more poll. This is the last question for today. Think about your current organization and choose the one that you feel is most representative. What do you believe are the biggest obstacles to adding a student loan assistance benefit? And we'll just give another few seconds. Okay, that is exactly what we would expect to see. Certainly, budget constraints is the number one reason that we hear. Followed not too far behind is that it would not benefit all employees. but that's okay. So looking at budget constraints, I think that there's some things that employers can be creative with. There are benefits out there that I'm sure are being underutilized currently. Some of them may be because of the employee student debt. The 401k, for example, is one example where funds that are in budget for 401k matches and things like that may be shifted to something like this. There are other creative ways that we have seen, and it's something that we could talk in more detail if we connect individually, but really what we're seeing is people shifting and realizing that this is part of the sort of the new way of doing business, that education has to be a priority, whether it's already attained or in the process of being attained, for employers to move forward. Not all employees would benefit, that's true, but certainly a very large percentage. And if you look at your benefits across the board, there's a number of benefits that are not heavily utilized. You know, flexible spending accounts come to mind, commuter type reimbursements. There are several things out there, but you could also pair this type of program with a 529 savings program. So those who don't currently have their own debt, but maybe have dependents who are going to go to school, you can use those same sort of dollars that you would use to pay off student loan debt. You can offer a 529 savings plan or something similar to those who have dependents who would be going to school in the future. So just some things to think about. Okay, so how do you get started? I don't know about you, but I always find it kind of daunting to roll out a big new initiative and where to get started. So some of the things that we look at is that education benefits in general, they should be looked at holistically. There's no one silver bullet to fix every problem that an employer has. So, you know, looking to move forward with a student loan repayment benefit, it makes sense to do the following. Define and develop your goals. So look at things like, what are your recruitment goals, your retention goals, your diversity initiatives, your upskilling and promotion goals, productivity, employee engagement, satisfaction, and wellness. This is something that you may have to engage other areas of your organization in to have these conversations so that you get a full picture. But in order to make it really have an impact in the way that you want, these are conversations that are important to have. Next thing would be to define an education benefit philosophy. So you want to look at, of course, ensuring that it encompasses, you know, your overall goals that we already defined. But then you need to build a plan to promote this, and not just internally. This type of program, it's important, whether it's student loan assistance or any other education benefit, it's important to promote what you're doing, not only to your employees and making sure that they understand what's available to them and the support, but also externally. This is a huge way to build brand loyalty. It's also important as you're recruiting, when you have prospects looking at your company as an employer of choice, even if they don't have any plans to go back to school or they don't have any student debt, they want to see employers who are cutting edge, you know, leading the way and taking care of their employees in this manner. So it's important to promote and determine what you're including. So, you know, how you're going to hire people with degrees, without degrees. You're going to offer tuition assistance, student loan assistance, in-house training, external training, scholarship programs, 529s. You know, all of those things should really be defined in sort of a formal philosophy. It'll make it easier going forward.
So we looked at a lot of data, a lot of stats, the impacts of debt on employers, employees, and we just got done reviewing some potential solutions. So now we can talk about how Edcor's Freedom Line can specifically help. So as part of our Freedom solution, we do provide consulting that will help you develop your student loan assistance program and meet those overall goals. So a lot of the goals that we've already talked about with recruiting, retention, upskilling, productivity. So the program can really be designed to pinpoint specific problem areas within your organization, or you can figure out ways to roll it out to the entirety of the company. So again, for some people, this is probably going to come down to budget and some budget constraints, and maybe some ways are to define a pilot program within your organization. So, and then we'll address some of the design specifics for those with degrees, without degrees, and again, maybe even going into that dependent debt and throwing in a 529 plan. So as Edcor continues to consult with you, we'll make sure that all of the common policy elements or requirements are covered. So things we'll go over are, how often are you going to make your supplemental payments? Are you going to make them monthly, quarterly, annually? So again, remember, this is meant to be supplemental, so it does not replace the monthly payment that the student is required to continue to make against their student loans. This is, again, as we talked earlier with the savings and taking gears off of the debt, this is meant to help pay down those student loans faster. So are you going to do a maximum number of years or a maximum maybe total dollars? And are you going to require your employees to pay back when they leave the organization? Are you going to address those without student loan debt? We'll review some of the taxability, which we'll talk about here in just a second as well. And what types of loans are you going to offer under the benefit? So some of the basic standards that we are currently seeing out there in the market, an average payment as low as $100 is seeing very positive responses, and people are willing to provide that loyalty to the organization and stay. And most employers are putting in a payback clause. So when they're contributing to helping pay down the student loans, they are expecting some of that loyalty back to their organization. And most employers are putting a lifetime maximum of either years or total payment. So this is not an unending bucket of money that can be paid towards student loans. And when you're looking at that holistic program of tuition assistance and student loan assistance, employers are not allowing they're not allowing their employees to participate in both programs during the same plan year. So I could participate in both, but I'm going to have to choose which one I want for that plan year, and maybe the next year I want to switch to student loan and then go back to tuition assistance. So as you're planning your benefit and considering adding student loan assistance, as Sarah talked about a little bit earlier, you're likely to be able to find the budget within some of those other benefits that are underutilized. 401k is a great example for that. So, because you got to remember, a lot of those graduates, as we learned earlier with some of the stats, are not contributing to that 401k because they're straddled with so much debt. So beyond the consulting and helping to develop your program and policy, the Freedom Solution will also help with the administration of your program, which will make this very easy for you. So Freedom will automate the entire process for you from start to finish. You'll be able to get some data and metrics to help measure those results, and we use it as a recruiting and retention tool. We'll also be able to present refinancing and financing options as well as financial wellness support. So again, we go back to some of what we heard earlier with all the worry about their student loan debt and not knowing how they're going to pay off those student loans. We'll be able to deliver up-to-date information regarding taxability and other legislation as it occurs. So most of us know at this point this benefit is taxable to the employee, but there is lobbying that is occurring to include this benefit under Section 127 of the IRS Code, which is the ruling that says that employers can give their employees up to $5,250 of tuition money tax-free. So, and to go beyond all of this, we talked about a holistic approach. Edcor can support a holistic education benefit solution that includes the student loan assistance, tuition assistance, scholarship administration, financial counseling, and support. So student loan assistance, as we kind of wrap all this up here, is a very forward-thinking benefit for employers to offer their employees. We went out a little further to 2025, but even more near future. By 2021 or 2022, it's expected that a third of employers will offer this benefit. So if you're considering adding this, now is the time to do that and be that forward-thinking company.
All right, so we're going to open it up at this point to questions. I'm thinking that we have some that have come through.
Yes, okay. So for a recap, somebody was asking what are the, I know you covered this extensively, but what are the incentives for the employers to offer this program?
So I think there's a number of things. Certainly being an employer of choice, being able to choose the top candidates that, you know, for your open positions definitely helps. Longevity and turnover are affected, productivity, and also your diversity and inclusion goals are also helped along. So I think there's a number of, really a number of places that the employer benefits.
Okay. And what type of benefits offerings are available for small employers to help minimize student debt? They commented too often focuses on helping students right out of school with debt. What about help for the parents who are close to retirement and want assistance?
So I think there's a number of things that can be done. We talked about the 529s is helping those who have student or kids or dependents that are getting ready to go to school. So having that type of program, having financial counseling and advising, as well as academic counseling and advising, which is also something that we provide, can help the individual learn what's out there and become a smart consumer, so that they're not just going to the school or racking up debt with the university that has the, you know, highest marketing dollars, and you see, you know, on TV all the time, that you're really focusing on what's important and really having a plan to strategically work on getting that debt out of the way. So I think in that case, it's more of a financial and advising piece. Now, as far as small organizations go, I mean, certainly student loan assistance is we don't discriminate here at Edcor. We can we can manage any size company's student loan assistance program. So if you're a small employer, we're happy to help in that regard as well.
Okay. What did you say about the percentage of companies that do not have student loan assistance today? And what is the expected percentage going to be in 2025?
So currently today, about 8% of organizations are offering the student loan assistance. And by 2025, they're expecting that 35% of organizations will be offering this benefit.
So I think a lot of people want to know about how does this work? Does this work through payroll deduction or a separate standalone?
Yeah, so for Edcor in particular, it's not actually a payroll deduction. It is funded by the employer. So if you decide that you're going to help give the employee a leg up on paying back their student debt, let's say you decide $100 a month, basically what would happen is there would be an account that would be funded, and Edcor would pull from that account the dollars that were allotted for each individual, and we would make the payment directly to the student loan provider on the employee's behalf. So in theory, unless you have a really great budget and are really generous, the employee is still making their minimum payment. And the idea is that this would be a supplemental amount that goes on top that's paid by the employer. So on average, $1,200 a year is what we see for a participant. So that's how that works.
Okay. What about help for nonprofit organizations?
As far as, I'm not sure I guess I'm not sure how to answer that question. I mean, certainly they're eligible just like anybody else to participate in this type of benefit. If it's a budgeting question, we would need to sit down and try and get creative in how we could help to budget for this sort of benefit. If I'm missing the question, or if there's more, please send another one. I apologize.
Does a 529 savings plan apply to dependents already enrolled in college?
Meaning, can you set one up? I think is what they're asking, and the question is yes, you can, and you can contribute while they're while they're in school.
Okay. Would you please repeat the possible upcoming tax legislation on tax, allowing how much without being taxed? I think they're asking to repeat the upcoming tax legislation.
Yeah, so we don't know that it's upcoming tax legislation. So currently, Section 127 of the IRS Code says employers can provide tuition assistance to their employees up to $5,250 tax-free. So that falls specifically under the tuition assistance programs. What's occurring right now is there is a lot of lobbying going on saying that student loan assistance programs should also be considered under Section 127, that anything that goes towards a student loan assistance pay down or repayment program would also be considered not taxable, and capping both those programs at $5,250. So no legislation has passed as of yet relating to that, but we are watching it very closely. Certainly we're hopeful that that goes through. We think that would be certainly great for the market and the economy, and helping people pay down their student loans and not taxing the employees for that benefit under student loan assistance. So we're definitely keeping our eye on that, and we'll definitely share information as soon as we hear more about that, hopefully on the positive side.
Okay, so an audience member has a son graduating in 2021. As part of the interviewing process, would you advise that he inquire if the employer offers student loan assistance up front?
Absolutely. And honestly, if they are, they're probably like touting it from the rooftops because it's still such a small percentage that employers are making a big deal and getting a lot of traction. But just like any other benefit, like tuition assistance or student loan assistance, anything that can put dollars in their pocket, they definitely should ask about.
Okay. To the employer, is this a charitable deduction or a payroll expense?
Well, it's really neither. It's not a charitable because let's see how that would work. They stumped me here. Hang on. Can you read it one more time for me? It would be a payroll expense, I would think, because
they're asking if it was a charitable deduction or a payroll expense.
Yeah, it's a payroll expense because it's basically income being paid on behalf of the employee, or benefit being paid on behalf of an employee, which is why we're hoping that it will get rolled into the Section 127 IRS tax laws, where the first $5,250 paid a year is non-taxable to the student.
Okay, for the next question, when an employee leaves an organization prior to their retention date for employer contribution, how do employers get the money back? What is the cost to the employer?
So this is would be the same even like within a tuition assistance program or any time there's a payback requirement. I mean, you have to look at your payroll laws one to begin with. Some employers will do clawbacks out of the last paycheck of the employee. Now, that's not necessarily legal in all states, so you have to be very careful and talk to your payroll department and understand what you can and can't do. Others will set up payback programs where the employee, whether they want to send in checks on a weekly basis, a monthly basis, until their debt is paid off. And in extreme cases, some employers have sent that off to collection agencies and collected the money that way, which obviously at that point you don't get all of the money back, but you would recoup some of the money.
Okay, another question that came in. In terms of family of the benefited employee, are there any options beyond the 529 plan? Are spouses sometimes given assistance in the case of like a stay-at-home mom with student debt?
This program, to be honest, it is the company's to define. So if that is something that it would be important to them to support spouses or significant others, then that is for them to define. So you absolutely could put something like that in the program. There are no rules or regulations around it. So that's what's really nice about the education benefits as they exist today is they really can be whatever you need it to be for your company to make sure that you're getting the best talent. And so if that's supporting the family staying at home, then that may be the way you want to go.
Okay. Does this count as income for the employee? Do they need to claim it at year end?
It's a fringe, so it would be managed the same way that their other fringe benefits are managed.
Okay, how about parents who have taken out Parent Plus loans to assist their children? Can they tap in on this benefit too, or is it only students? I think that's the...
Yes, well, they can under our system. They're allowed to. It's up to the employer's policy if they allow those types of loans to be covered under the policy. So it's specific to the employer, but the Freedom system can handle that. Yes.
Seems like we covered most of the questions. Are there any last comments you'd like to give the audience?
Just really wanted to thank everyone for their time and their questions. I have put a slide up here for you to get a hold of us in any way. I know we may not have hit every single question, and we're happy to do so. You know, we certainly have a website that has a blog. If you want to sign up for the weekly blog, we talk about basically every topic under the sun when it comes to student loan assistance and tuition assistance, whether it be regulations or whether it be what we're seeing in the industry. So it's very informative if you're looking for some additional detail in why people have programs and what they're using them for. We're also happy to do a demonstration of our actual system and have conversations about how we can consult and maybe help you put together a program. So certainly reach out to us, and we'd love to help.
Okay, thank you, Adrienne and Sarah, for a great presentation. And I'd like to especially thank today's webinar sponsor, Edcor, for making this possible. Before you exit, please take note of the credit codes for today's event. The HRCI number for today's webcast is 398101. This webcast is also approved for SHRM credit. The SHRM credit code is 19-3YMYH. A slide with today's credit information is on your screen. You will also receive an email from HR Daily Advisor approximately 24 hours after this event with a copy of today's credit information, along with the link to the recording and any program materials. Please also note at the close of this webcast, you'll see an exit survey. To make each webcast valuable to you, we'd appreciate your input. HR Daily Advisor and Edcor would like to thank you again for joining us today. This concludes our program.